Solarvest Holdings Berhad was founded by three friends, namely 𝗵𝗠𝗃𝗃, 𝗦𝗵𝗵𝗃 and 𝗏𝗏𝗏𝗏 in 2012. The company is a downstream player in the solar industry, providing engineering, procurement, construction and commissioning or EPCC services. They are principally a solar turnkey EPCC contractor for residential, commercial and industrial properties as well as LSS PV plants in Malaysia. Other services that they provide are operations and maintenance of solar energy system, sales of electricity through solar energy generation, as well as electrical and fire protection installation works for a related party and third party. The only country they sell to is Malaysia. For more information, you can visit their website at solarvest.my. Great revenue and gross profit growth overall, rising as high as 618% and 271% respectively over the past 5 years, with more demand for their EPCC services, especially for their LSS PV contracts. Likewise for their operating profit, rising more than 240%, contributed by higher sales and gross profit. However, their profit margins start falling since financial year end 2018 as the company starts to take more LSS PV projects, suggesting more expenses are needed to undertake those projects. The fall in profit margins also explain the drop in ROIC since financial year end 2019. Although they have a good run initially, especially in 2018, however, it seems that the company cannot deliver a strong earnings after that. Great improvement on their remuneration to profit after tax ratio, with profit rising almost 300%. The company was incurring net debt, but later became net cash after they took more LSS PV projects, as well as fundraising from IPO. As you can see from their share capital, it rose more than 59 times in just a year, thus suggesting partly of the funds went into their cash balances. Negative operating cash flow incurred in financial year end 2016, in line with more trade receivables and less payables. Operating cash flow also dropped quite substantially in financial year end 2018 due to the rising in contract assets and decrease in contract liability. Interestingly, CapEx spending was dropping over the years. I guess the company is not in the business expansion mode. Even so, they still managed to achieve higher operating cash flow. No dividends were declared from the company so far. Negative and drop in free cash flow for both financial year end 2016 and 2018, as explained in the previous slide. Overall, free cash flow has been growing steadily since financial year end 2018. All in all, I rate their company 2.6 out of 4, which is about 65%. Not too shabby financial performance. Overall, the financials are good, but it would be great if they can start declaring dividends to reward their shareholders. After analyzing Solarvest's 10 years of financial data, here are my thoughts. Number 1, the company's current business growth is dependent on the amount of EPCC contracts they can secure, specifically the LSS PV. As you can see from their revenue, profit and cash flow explosive growth, the main contributor is derived from there. Thus, it is important for Solarvest to continue securing more LSS PV contracts in the future in order to sustain their growth. Besides that, I think Solarvest cannot escape from the rise in cost of goods sold as well as operating expenses, as the contracts that they are handling require a large sum to execute. I hope the company is able to come up with a more cost-effective way to stay competitive in the market. Lastly, I feel that the company may raise more funds in the future unless their cash flow can sustain the ever-growing working capital from their EPCC contracts. You can see how aggressive 𝗖𝗵𝗲 and 𝐾-Power is in raising their fund for their projects. Hopefully Solarvest wouldn't go down into the same path as their peers. That's all for today's video. If you enjoyed the analysis, make sure you smash the like and subscribe button. What company should I analyze next? Let me know at the comment section down below. Thanks for watching and till next time.